Welcome back. You're with us here on Editors Roundtable. We've been discussing what's happened this week, and of course, we're looking ahead as well. Now, one name which I think a lot of people have lots of questions and queries about is Bajaj Finance. This is true for retail audiences. It's true for institutional fund managers, just because of the sheer number of people who own it, because, of course, it's done so well. I'm talking about Bajaj Finance. This is a name which I think, portfolios really want that this does well. Why? I'll tell you in just a bit. But the stock returns first. Like this week, it's down 10%. In 2022, it was down 6%. And, from the all-time high, it's down about 26%. By the way, I pointed this out earlier. 2022 was the first negative year for Bajaj Finance in 10 years, right? So it's not done very much for almost a year and a half or so. What's the reason for the latest fall? The numbers, the business update which they presented, Q-on-Q loan growth was 5.7%. Market expectation was 7%. Some said, well, what's the big deal? It's still good growth, strong growth on a year-on-year basis, but the markets are markets, and they did not like the numbers. Stock was marked down. This is the reason why I think, this is a name which really has to do well for that feel-good factor to return in portfolios. Mutual funds own about 36,500 crores of Bajaj Finance in portfolios. This is data from Value Research as of the end of 30th of November 2022, the latest data that we have. Look at, this is, what each of these schemes has as a percentage of their total AUM. Axis Long-Term Equity owns 9% of Bajaj Finance as a percentage of its AUM. You can see the other schemes. There is Motilal Oswal Flexi Cap, 6.5%, DSP Flexi, UTI Flexi, SBI Focused Equity. And I've kind of limited the list. It's a very long list. As you can see, 36,500 crores of Bajaj Finance is owned by mutual funds. So it's a large number. Now, to a very cursory kind of look at perhaps why is the market marking down this particular stock. Look at growth rates. I'm just presenting 2022 actual, 23 expected, and 24 expected. You look at Bajaj Finance as compared to HDFC Bank, and you realize the growth differential in loan book and the stock price is very closely correlated to loan growth in the case of Bajaj Finance. It's not what it used to be. I mean, Bajaj Finance has grown as 40%, 70%, 115%. I went back and looked at numbers, but now this is in the 20s, right? High 20s, solid 20s, but still in the 20s, more than HDFC Bank, but the differential is not what it used to be. Look at the valuation comparison with HDFC Bank, and then it becomes even more stark. On a one-year forward consensus basis, Bajaj Finance is 6.5 times, HDFC Bank is 2.9 times or so. If you don't compare it to HDFC and just look at what Bajaj Finance's own history is, as I said, 6.6 current, historical average is 4.4, so it's still pretty pricey as compared to that. The peak, of course, is about 9.5 times from where it has actually dropped off quite a bit. What next? I think the single most important factor is management commentary post the earnings on the earnings conference call. I remember a few years back, you had a situation where the numbers disappointed. The management came on the call and said, well, this was deliberate. This is strategy, and the stock markets liked it. Will we see a repeat of that after the third quarter earnings is something to watch out for? I mean, just a couple of other factors. The absolute high net interest margins that the company enjoys perhaps should limit any damage to their margins because of the interest rate environment. Competition is high. And of course, for the NBFC sector, the valuation dispersion is huge. There are NBFCs trading at 1-time book, and there is this Bajaj Finance, which is at 6.6 times book. So the question is, will the laggards do well or the leader start to outperform once again? But I think there is one thing which history has shown us over the last 10 years. It's not paid off to bet against Bajaj Finance. It's always come back stronger than before. Will it happen immediately or will it take time is something we need to wait and watch. But that's enough from me. Sonia, IT services is going to be the focus next week when we come back, starting with TCS, which reports on Monday.
Oh, absolutely. So earnings season is going to come in thick and fast, right? TCS begins on Monday, followed by HCL Tech and Infosys on the 12th, followed by Wipro on the 13th. And then you have big banks like HDFC Bank and ICICI Bank coming through in the rest of the month. Now, for the IT sector, the expectation is that the earnings will be on the weaker side because it's going to be a soft quarter impacted both by Q3 seasonality as well as the worsening macro, setup. Now, if you look at the IT sector, HCL Tech, remember, mid-quarter said that there were higher furloughs in high-tech, BFSI and telecom. And just to put a few numbers before we wrap up the show, HDFC Securities expects revenue growth for the sector to decelerate from 13.5% constant currency in FY23 to 8.5% in FY24. And the growth rates across the board are expected to slow down. For TCS in this quarter, just 1.5% growth. Infosys as well, 1.5%, while HCL Tech will be about 3.5%. Now, the key things to watch out for, and I want to toss this question to Pankaj as well, how are the tech budgets for calendar year 2023? Has there been a cut down in client spending? If the tech budgets are flat and large deals are absent, can IT see double-digit growth next year, or will they have to scale down their earnings? Pankaj, over to you. What's your sense of what the commentary could look like from the IT companies?
So the sense we are getting is that the commentary on the demand and the revenue growth could be more muted this quarter. What we are hearing is that the IT budgets across the board has been quite muted for CY23, and that will show on the commentaries when we enter into the earnings season next week. But the only positive will be the commentary on margins. I think across the board, companies we expect to come in and talk about positive tailwind on the margin side, because that will clearly be shown in the hiring rates, which we have seen over the last 2 quarters, that has materially slowed down. Attrition has come off. And I think margin levers will be a positive surprise from a commentary perspective moving into the 4th quarter. But demand, we believe, will be more muted. IT budgets are more muted globally.
All right, Pankaj, we'll let you go on that note. Thanks a lot for joining in. And to all you viewers, have a great weekend. Thanks for watching Editors Roundtable.
चार्ट्स में विजुअली